Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast. I'm Garrett Palmer, joined here with Senior Equity Analyst Ben Nye. How you doing?
I'm doing well.
Good. So Nike reported earnings earlier this week. Not the best results. Give us the highlights about the earnings report.
Yeah, so I mean, going into it, we're a little cautious, and we can talk about that in a little bit. But the highlights of the earnings report are EPS came in dramatically better than expectations. Nike reported earnings of 68 cents a share. The street estimate was looking for 53 cents, so it's a 15-cent beat, which is very, very good. Revenue, however, came in under. So revenue only had $8.43 billion in sales. Estimate was $8.47 billion. Revenue guidance was also weaker than the street wanted. Revenue guidance was about $8.64 billion. They do it on a percentage basis, so if you do the math, it works out to about 8.64. Estimate was about 8.85, so underperforming there. And also, the biggest piece of bad news, I think, was their gross margin guidance. They came in with gross margin guidance of about down 1.5%, which is very significant, especially because they're cycling over easier comps, which means that you should see the gross margin declines ameliorate over the course of the year as they get easier and easier comps. That's not what you're seeing. The street was looking for gross margin decline of only down 40 basis points, which is 0.4%. So you're seeing a dramatically worse revenue and gross margin picture than the street had wanted.
And last quarter, we did videos on Nike. We are pretty in tune with Nike constantly. You were very bullish on Nike, but before this earnings report, at the beginning of this week, you weren't so bullish on them. What made you change ahead of the big news?
Right. Well, it's a sad fact of markets that you're never bullish enough before a stock goes up.
Yeah.
So although I was bullish, I'm not going to say that I was profoundly bullish enough to have a huge position and actually do really well with the stock.
Right.
I was bullish and bought some stock, but it wasn't game changing by any means. Similarly, before this quarter, I sold a little bit, but didn't sell all of it. Sold about half.
So not bullish enough before it runs up,
not
bearish enough
before it goes
down.
No. The reason I was looking at was I had been doing a study of the futures orders. I'm a big proponent of the Mosaic theory, which says, look at all the aspects of information that you can gain and then use that to come to a conclusion. So you use not just what the company is saying and not just look at what other companies are saying. Do channel checks, and use new technology to form an opinion on a stock and give you more up-to-date information. So that's what I was doing with Nike. And before their last quarter, they reported in December, which was the quarter ending in the end of November, I've done a study on the predictability of revenue based on futures orders. And what I found was that the correlation between futures orders and next future revenue had declined dramatically, something from like 0.7 to like 0.4, based on the study that I ran. So futures orders was becoming less and less a thing, and yet all the sell side that's all they could talk about is what futures orders are doing, what futures orders. This was coupled with management commentary that futures orders are no longer a great barometer of what future revenue is going to do. So based on those two aspects, I thought, well, maybe is there an opportunity here? So I looked at the Google Trends data. I just searched for Nike. And again, a big thesis was that Under Armour was coming to take Nike's lunch. And I looked at it and said, well, Adidas is actually coming on pretty strong. But Under Armour is still very low relative to searches for Nike. So I said, and Nike was looking pretty good versus its historical Trend. So I was thinking, there's a good chance that Nike actually does reasonably well this quarter, or at least has a good story to tell, and they did. And so over the course of the quarter, as this bullish trend got rolling, and you start to it's very behavioral. So when a few analysts start to change their tune, then it definitely starts to roll. And so I think you had a bit of an overshoot. And so I was updating my models coming into the current quarter, and what I found was that Nike really had a poor Christmas. Usually you see a pop in the Google Trends at Thanksgiving, another pop around Christmas time, and you didn't have that this time. There was a peak, but it was a lower peak. And meanwhile, you had Adidas that was going from strength to strength. Under Armour is still relatively weak. But Under Armour also came out with a bad quarter. So Google Trends was ingredient 1. Ingredient 2 was Under Armour's bad quarter. My thesis was that would result in higher levels of inventory in the channel, which would lead to price competition and potentially additional gross margin erosion at Nike. So that was the second piece. And the third piece was just the stock had run up so much, and I thought that it had overshot. So whereas previously I thought the risk reward was favorable on Nike, the risks had certainly increased over those 3 months. And so I wanted to take some off the table, especially when you coupled that with the futures orders they reported last time. Now, I did say that futures orders become less correlated, but in this case, they lined up with the Google Trends data. And so I was a bit reluctant to be bullish on the shares. And in fact, I did sell a little bit, and that was prior to the earnings announcement.
Gotcha. So Google Trends data and futures orders are lining up, so we've got to start a new study again.
Yeah.
Figure out how they correlate to each other as well.
Right. Well, and I think it's all about using all the pieces of information that you can in order to come to a conclusion, and trying to tell yourself a story. Tell a story that makes rational sense. Doesn't make sense if everything's rainbows and unicorns, but actually makes sense in the real world.
Big fan of the semi-strong market theory.
Yeah. Big fan.
So getting back to the quarter, looking forward, we've been looking back this whole time. What did you like and what do you not like going into next earnings?
Yeah, well, I mean, the problem with the quarter was that you obviously had the earnings beat, and then you had the revenue miss, and the guidance was relatively weak. And so when you have an earnings beat like that, you have to say, well, how did they beat earnings? And they had some good control on the costs on the SG&A side, and the tax rate was lower than
pretty significantly, right?
By about 3 points, yeah. So I mean, 3% on 53 cents. I mean, that'll boost it a little bit. Big thing was SG&A, and you had a bunch of analysts coming out talking about how SG&A was a bright spot. But what you have to remember when you look at SG&A on a year-over-year basis is what was happening this time last year. And Nike can be extremely promotional at times and has this piece of SG&A that's called demand creation, and that's when they go out and spend money on sponsorship deals and any way to actually get, it's demand creation. And so this was elevated last year. Why was it elevated? Well, I mean, they had the Olympics and the European Soccer Championships, the Euros. So yeah, they were going to spend a lot more money on marketing last year. So of course that's going to be down this year. So to me, I'm not incredibly impressed with it. I mean, it's good that they can control some expenses, but it's not a game changing for the thesis. And the thesis for Nike has to continue to be that it's a growth story. I mean, it's not a cheap stock. So if it's not growing, then you have to value it as a value stock. And if you value Nike as a value stock, it would be quite a bit lower. Some of the analysts, I think, give too much credit for the SG&A control and not enough rational thought about about the lack of revenue growth and lack of expected revenue growth. And I think that some of that is because a lot of these analysts have recently upgraded the stock and might be caught offside and need to, support their bullish thesis.
So, on that note, up to this point, you don't think the stock has gotten beaten up enough? You think there's still some downside from the earnings specifically?
Yeah, I mean, I think that the downside is relatively limited because I still own Nike shares, so I don't want the downside to have really a ton of tail risk potential. But I would wait on buying. So for me personally, in my opinion, I am waiting to buy until the 52s, so maybe 52.50, maybe high 52s. I obviously missed it. I think the stock's up to in the 56s now already, so we're doing this video like the stock just cratered, and it was down like 6% on earnings, but I mean, based on my sale, I'm not even sure if I'm that much ahead, honestly. Right. So, I mean, it's not the end of the world for Nike, but I would definitely wait for a little more weakness before adding to it.
Gotcha. All right, this has been a review of Nike's earnings. Follow us on Twitter, Tusk Media, or twitter.com/TuskMedia LLC, facebook.com/TuskMedia LLC, and we are live almost every day at about 4:15, so check that out. Thanks.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.